Okay, folks, lots to talk about. Number one, we need to give a violent update on the market, plays, and Ooga Booga. We need to discuss why crypto is holding a very bullish trend right now and why Bank of America just put out a very extensively bullish piece on the crypto market and why they believe that it's too large to ignore. And before we get into all of this, the only thing that I ask of you in return is that you hit that ravishing like button and also don't forget to subscribe either. Okay, so the market had a nice and traditional comeback after yesterday's bludgeon. On one hand, the market is giving frequent discounts, but on the other hand, well, the discounts are so weak and shallow that it's really hard to get excited. And then on top of that, the overall risk-off anxiety in this period has been very strong, meaning that a lot of the big momentum squeezers that you'd see come out of thin air pretty much every day just haven't been happening. But welcome to the stock market where you want stuff, but the market just doesn't always give you what you want. In terms of what's working today, lovely Mara taking ground, going back into some lovely prominence. And they just announced yesterday a $100 million revolving line of credit and 91% growth in Q3 mined Bitcoins. And of course, today's rally also comes with the backdrop of Bitcoin skyrocketing. Another Bitcoin miner, BTBT, quickly rose back to prominence today and broke our red directional SMA line. They announced that their offering had finally closed, which was what spooked shareholders back at the end of September. This allows traders to start looking past that round of dilution fear. Bitcoin is skyrocketing, which is also a massive bullish pressure on BTBT. Short interest is very heavy on this stock, and of course when you have very heavy short interest on a stock that just completed an offering and at the same time is mining an asset class that is booming, then you're definitely going to have some of that short squeeze speculation, which has helped induce the rally today. Outside of that, this capital will help BTBT expedite their transition outside of China because, again, China just banned crypto mining, and anything that helps expedite the process of BTBT getting the hell out of that market is going to be good for them. The SDC squeeze play has made another attempt upwards today. This is as they announced they were granted a patent for the company's Smile Bus concept. It's like a bus, but it's smiling. Definitely not as cool as the Magic School Bus, though. But in all seriousness, amidst this catalyst, SDC has managed to continue holding its status as one of the most mentioned retail traded stocks out there, which means that on risk on, catalyst driven days, you're going to see huge inflows because there's a lot of people on the sidelines saying, hey, should I buy it today? Should I buy it today? Ooh, there's a reason for me to buy it. In terms of the setup, you saw short start increasing a bit towards the end of September, first day or so of October, when we had SDC going into a sell-off. They're trying to expedite their gains. Today, they got the heat turned up on them, seeing some resistance to their easy profit to the downside. When you get a patent, you build a big wall around your product that makes it harder for competitors to compete with you. Do I like SDC as a company? No, this is really just a squeeze play. But it's similar to the traditional squeezers we've seen. They come and they go, but they're damn fun in the meantime. Okay, CEI. So after its rally to 485 that broke way past our projected resistance level at 310, it's now tanked back down to 132. When it broke past resistance and even some before that, we started hammering it's time to start tightening your risk management. It's time to start taking your profits. Not that that was an entirely abstract concept. I mean, we all know how these end. But still, anytime I mention the S word when it comes down to any stock really in the market, people are like, the S word. Sell. That can't be in our vocabulary. Taking profits, that's disgusting. Most meme stocks out there run based on cult-based following, so when we say take profits off the table, you have a lot of people in those relative communities that will get upset with me, but it's not personal, it's mechanical. When I'm talking to people on this channel, I'm talking to traders, right? And when a stock hits a certain level, you start tightening your risk management. That's just trading 101. If something goes from 50 cents to $4 and you're not locking in any profits, you did something dramatically wrong. It doesn't matter if so-and-so said on Twitter that it could go to 10 or 15 or 50 bucks. Who cares? At the end of the day, squeeze rallies and the price points at which they can go to are very arbitrary. And when something's arbitrary, you need to have some sort of risk management plan to control it. And mechanically, that's just how I look at it. But you can play it however you want, right? You don't have to yell at Charlie for saying mechanically I need to lock in some profits. If this kept going to 6 or 7, I would have kept saying the same thing. Tighten your risk management, lock in profits. Also true that short sellers put out big short reports into this uptrend knowing that it was going to dive dramatically when they did that. And a lot of it's just BS. But hey, if you have tighter risk management and logical trading, you don't have to be in the situation where you're just constantly having to hold these stocks that you don't actually believe in endlessly. Okay, next, the tier of Palantir. So Palantir took a nice run into the after hours on news of a $823 million Army contract. But here's the thing, what you hear about Palantir on a day-to-day basis is almost completely BS. Oh no, Palantir lost one contract. Palantir is about to lose this other contract. Oh, Palantir got this massive contract. Palantir got this other contract. Every single time Palantir has a new headline, either good or bad, you have whales and retail traders going and panic selling and panic buying the stock. When you're analyzing a company like Palantir, what matters is that, hey, the trend trajectory is clear. It doesn't matter what each individual contract is looking like, but the trend trajectory that yes, it's getting more contracts than it's losing. The contracts are scaling up. Palantir is implanting itself in the apparatus of information technology in this country and around the world. I say this because a lot of people get caught chasing the catalysts on Palantir and then they blow themselves up. And it's like, well, why? You're not going to be able to guess when Palantir is going to get the next big contract. But putting the work in to say, hey, well, they're getting more contracts than they're losing, they're providing more value, scaling their enterprises, well, that's enough to say, okay, well, in the future, they're going to get more contracts, and that's going to be more good catalysts, and that eventually they're going to provide more and more value, and then when you get a growth sector rotation, you're going to be rewarded very well. Okay, next, Ooga Booga AMC, so not much going on here from a stock level, but still some good news for the company. AMC posted the highest single-day revenue since pandemic on Carnage, that Venom movie, with more than 2.4 million moviegoers going to AMC theaters in the US this weekend. Very strong and record-breaking weekend for AMC, or as some media outlets call it, AMC stock fails to capitalize on a blockbuster weekend. Anyways, we can expect with James Bond coming this weekend that you'll see even better numbers. Now, obviously, this doesn't trade based on the fundamentals, but hey, it's very fun to make fun of short sellers who said that this was going to go into bankruptcy and that movie theater goers would never, ever return. Because why would you leave the house to see a movie? That is disgusting. In terms of the public short interest, it's steadily been increasing since midsummer, and this battleground is as hot as ever. Okay, now for the main entree. So today you're sitting on a very strong rebound in most cryptos. With Bitcoin fighting into the 50s, Ethereum trying to move up past 3,500, and a number of other notable coins like Cardano are up. Remember, the prevailing thought process during the dip about 6 months ago was that this dip would be the dip that looked just like those 2017, 2018 dips, where you'd see it sell off dramatically and then just slowly bleed for months and years before eventually finding another growth cycle. And predictions of this happening again were running rampant because Bitcoin went from 60 to 30. Those predictions so far have proven untrue. Bitcoin has managed to bounce back to an extent in terms of percentage-wise that it didn't see in 2017 and 2018. This also comes with the backdrop of Facebook and its companies Instagram, WhatsApp, and Messenger having huge shutdowns yesterday. In fact, the worst outage since 2008 for Facebook as a whole. And the reason this relates to crypto is because this is the risk when you have too centralized of an infrastructure. If Facebook's system was built on the blockchain, then the risk of outage would be diversified away. But anyways, this leads us over to the golden piece of research that Bank of America analysts just put out on why they are bullish on Bitcoin, why the crypto market is too large to ignore, as well as some of the risks. They lead with big points like the number of U.S. companies that mentioned a digital asset keyword on an earnings call rose to 147 from 17 a year ago. They bring up quotes from SEC Chairman Gary Gensler stating that the transformation we're living through right now could be every bit as big as the internet in the 1990s. That's a pretty bold comment. But they actually talk about and identify the clear problem that crypto is solving, because a lot of people are like, oh, yeah, crypto doesn't have any value. They said the problem is our current financial infrastructure was not created for the minimized friction our global economy needs as the form of money changes to digital. Today, our financial infrastructure is centralized, difficult to move accounts, limits access, 1.7 billion unbanked folks, is inefficient, cross-border settlement, lacks interoperability, and lacks transparency. At the end of the day, if somebody says cryptocurrency doesn't have any value, what they're really saying is, I don't understand what it is or how it works. There's no shortage of shite coins out there, but when you're talking about an entire industry, you better know exactly what you're talking about before you say there's no value. These are the same folks that say cloud-based software had no value 10 years ago. I don't understand what it means, so it can't be useful. And then Salesforce is like, screw you. They didn't actually say that. Don't sue me. And then Palantir was like, wah, ha, 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 ha. Palantir is still in the beginning of their evil laugh, but we'll see how that laugh ends. But you look at all the useful applications of digital currencies that they list, and it brings them to the very well thought out conclusion that we are only in the first inning of a major change in applications across most industries that will take place over the next 30 years. Here's their main point. With a $2 trillion market value and 200 million users, the digital asset universe is too large to ignore. We we believe crypto-based digital assets could form an entirely new asset class. Cough, they already have. But they go on, Bitcoin is important with a market value of 900 billion, but the digital asset ecosystem is so much more. Tokens that act like operating systems, decentralized applications without middleman, stable coins pegged to fiat currencies, central bank digital currencies to replace national currencies, and non-fungible tikis, or as they say, tokens, enabling connections between creators and fans. Venture capital digital assets / blockchain investments were 17 billion in the first half of 2021, dwarfing last year's 5.5 billion. This creates a new generation of companies for digital asset trading, offerings, and new applications across industries, including finance, supply chain, gaming, and social media. Multi-trillion-dollar industry with hundreds of millions of users and billions of dollars in venture capital flowing into it, and yet you still have people saying there's no value. Applications across finance, supply chain, gaming, and social media, and people say there's nothing you can do with this. It's useless. Venture capital's digital asset investments have been skyrocketing, which is not only indicative of how bullish they are on the industry, but is indicative in terms of how much money is being pushed to create more and more companies in every sector that are then going to make cryptocurrency as a whole more valuable. Creating the next generation of companies that use cryptocurrency is only going to prove the point even more for the value of it. In terms of risk, they do a good job of citing big regulatory risks, environmental, as well as complete shutdown risks like what we saw in China. But on the flip side, they make a case that we've made here on the channel many times before, which is, hey, if you have smart regulation, that's actually going to go ahead and speed up adoption. It's not going to hurt it. There's a lot of people that would buy crypto to a larger degree if they knew that there are some controls in place. The goal of regulation and why we have governments in the first place is specifically to have smart regulation that increases public trust. You don't want asset classes to be controlled by governments, but you also don't want them to be the Wild West where you don't have clear, fair rules in place. And the long-term political debate is how far you go in one direction or the other. We're not going to get into that. But my point is that when you get into the situation where you have tons of scam coins coming onto the market and pump and dumping everybody, you start asking the question of, hey, wouldn't some smart regulation, just very smartly placed regulation from regulators that understand it, wouldn't that increase the amount of capital that is willing to invest in the asset class? In totality, they also make a very interesting point in regards to Bitcoin, which is, hey, Bitcoin is becoming more and more stable and less volatile as it becomes more mature, which is also symbolic of the overall industry. Because in the early stage of an industry sector or even individual asset, it's always going to have huge volatility as people debate the value of it. But as time goes on and it starts reaching its real value, it starts getting a lot more stable because people are like, hey, we understand the value here. We're just looking towards the growth of the future now. We're not all just like, yeah, it's worth a lot one day and it's worth nothing the next day. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade with our step-by-step lessons, our private chat, and of course, our daily morning briefings, where we brief on what's happening in the market each and every morning, as well as my favorite catalysts and what my thought process is on them, I'll go ahead and put a link to ZipTrader U below. Make sure to watch the video on the website. I'll walk you through everything you need to know about the course so you can decide whether or not it's a good fit for you. FUD Stopper 50 will get you $50 off before checkout. If you're wondering what broker to trade these stocks on, well, we like to send new traders over to public.com/ZipTrader. They're a fantastic broker, and you will get one free stock when you sign up and deposit just $1 using our link below. Anyways, folks, that caps off the video, and I'll see you in the next one.